Hello, 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 people. Hello. Are you hearing me? Can you hear me, Miss Carol? Can you hear me?
I hear you loud and clear, my dear.
Yes.
Loud and clear.
Happy Monday. Happy Monday.
Happy Monday to you too. But I don't know if it's all that happy today. I can't lie.
Oh my God. Tell me about it.
It's not a happy Monday for me this Monday.
Jesus. Guys, sorry for the late start. Sorry for the late start. I'm telling you, man, I came in already and everything, boom, technical difficulties, you know, and I'm like, it threw me off, man. I'm like, oh, but you know, we still got to go. We still got to keep moving.
Keep on pushing on.
Yes, it's going to have days like this.
Pushing on.
Yes, we're going to have days like this. Like this. So, what's going on?
My dear, just, you know, life, and looking around at everything happening out there. It's just crazy.
Yes, as usual. We're talking about what's going on over yonder.
Yeah.
It is crazy.
It's just a lot happening, and we just wish the best for, you know, everybody who's experiencing that right now.
Yes.
Say a prayer for those folks.
Right, man, it's crazy.
Coming out of there, and a lot of the women and children who are being killed.
It's sad. It's really sad. If it's not one thing, I'm telling you, man. When is it gonna stop?
Yeah.
When will it end? Like, it's like I don't even want to watch news anymore. Like, it's always something depressing.
True. You know, and if it's not that, it's something local, like on the news. Just I think a couple days ago, this lady was coming home from work in the train station, and she's walking down the stairs, heading to try to get her train. And there's a man behind her, comes up behind her with a hammer.
Wow.
And kept bashing her in her skull 12 times. And we're all just watching this thing because there's video of it. And he kept hammering her. Can you imagine somebody kept bashing your skull like that? And it's like this woman was just trying to get to the train, and he's behind her. And then after hitting her, smashing her skull 12 times, he just took her bag and ran off. Of course, they caught him, you know, and I'm really glad that they caught him, because it's like, okay, really? Did you have to do that to her? She's in the hospital. You know, they're trying, you know, recuperating at least, you know, so we can only hope for the best, but she'll never be the same.
Man. And when this happened?
This happened in New York over the weekend.
Wow.
Yeah. Mm-hmm.
Crazy. I
So
mean, so he just randomly picked this lady,
yes, she's going down. We have subways,
right?
going down the steps in the subway to go catch her train. She's coming from work. He's behind her, a couple stairs up because she's going down the stairs. So he's walking down the steps behind her. He kicks her. And yeah, he kicks her. And then he had a hammer, and 12 times he's just going at her skull, just going at her. It's like, oh my
So
God.
wait. You sure that it's not like he knew her before and he have beef?
The woman is coming home from work. He doesn't.
That's what I'm saying.
He grabbed her purse and ran.
So he walks around with a hammer.
Clearly.
Wow. Clearly. I mean, I know New York is crazy because I'm from New York, and I know we got our little issues, but this is crazy.
And that's just one of,
wow,
one of the things that has been happening in New York. It's just, I won't even go into all the other things that are happening on the news every day. I mentioned it because you said, you don't even want to turn on the TV because it's like, it's amazing what you're seeing on the news these days, but there's so much happening, and people, it's all also a part of caused by the pandemic, because people are depressed.
They're depressed and stressed.
People are stressed.
But
and all the mental health issues that were
oh my God
already in existence have now been amplified.
Yes.
So it's way worse than it ever was.
But guess what? Look at it. The pandemic was worse 2 years, like when it just started. I can understand what's going on. I surely can. But right now, to me, it is not that bad like how it was a year ago or 2. When did we start the pandemic? Is it 2 years yet?
2020, yeah.
Oh my God. So it's I don't know. It's crazy.
Yeah, it is. So basically right now people are going stir crazy because it depends on the state though, but there are some states we still have certain restrictions, that we're still going through. And even if the restrictions, some of them are being lifted, like right now in New York, schools are lifting the mask mandates for kids in the schools, by next week or something. They no longer are mandated to wear masks, but they're still going to have to wear masks in certain places, like on public transportation, stuff like that. Everybody has to. And so there are different rules. But the bottom line is, this is a whole different way of life than what all of us have ever experienced.
Right.
So it's very, very different. And at this point, people are going crazy. People are fighting over just wearing a mask. They don't want to wear a mask, and if they're being told if they're being told to wear a mask, then all of a sudden it's like they're losing it.
Okay, I forgot to mention real quick for our listeners out there in Radio Land and in Facebook world, because we're so used to being on Facebook Live today. Unfortunately, today we will not have Facebook Live while we're on the air, which I know Miss Carol is just so distraught about because she loves the Facebook Live. But for this week, we will not be having it on live. So you can catch us on our YouTube channel. So you'll be able to see us then and see the show. So I just wanted to let you guys out there know that we're not going to be doing Facebook Live this week. All right. Tune into myturnradio.com and you can hear our lovely voices on there. Or if you're not able to and you want to see our beautiful faces, you can catch out our YouTube on Let's Connect, and you can surely see us there. All right.
Absolutely. So for those of you who already know, and for those of you who don't know, we'll just remind you, we are the show called Let's Connect, everybody. And we are here on Mondays. Today we had a little hiccup, like Reese said,
Not no hiccup, not no little hiccup. No, it's little. It was a little hiccup. but Reese came to the rescue.
Well, we had a hiccup today, people, some technical issues and difficulties. So we apologize immensely for that.
I apologize.
Yeah, unfortunately, things happen every now and then, and it happened today. So we're not able to come to you live like we normally do through our Facebook page where you can see us and chat with us and send us your great comments. You know how much I love the comments. But so you know, we enjoy being with you, and we hope that you enjoy being with us. We're here every Monday, usually between 6 p.m. and 8 p.m. Eastern Standard Time. So
yes, yes.
This week and next week and each week to come chat with us. All right. So
Okie dokie.
Everybody.
And hold on one minute. Oh, Jesus. It's now time for our topic of the day. And the topic of the day is taxes. Show me the money. I know everybody like that. Whoop, 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 whoop.
Oh, everybody, I don't know about that. Maybe only
everybody love taxes. Everybody love tax time. Okay? So don't even go there. Don't be acting all bougie you don't like tax
only if
time.
You're getting money back. If you're not getting any money back, what's
okay, for people who are getting money back. Okay.
Really?
Yes.
And I know our guest is about to school you because you must think that everybody's getting money back.
Hey, I ain't say that. I just like tax time. I don't know.
If I'm not getting any money back, no, I don't like it.
So our tax lady today, and I'm going to have her introduce herself. I'm just going to let you guys know who she is, her name of her company, and then she will take over. And she is the one that you will want to be friends with, the tax lady. Okay. And she is going to talk about business taxes and personal taxes. So help me welcome to our show tonight, Miss Antoinique Owens, the CEO of Dream Financial Group in Coral Springs, Florida. I love that entrance. Woo woo! Welcome, Antoinique.
Thank you, Andrea.
Welcome.
And the Let's Connect team. Thank you guys for having me.
Lovely. I'm glad that you decided to come. So let's just get into it. Let the people know who you are and what you do.
Okay, so hi everybody. I am Antoinique Owens, but you can call me Nikki. I'm the CEO and owner of Dream Financial Group, where we try to make your dreams come true financially, right? Because everybody is trying to get to the coin. So we help you achieve your financial dreams either through tax planning or credit restoration. We try to help you develop a wealth path to get you to achieve your dreams. So let's talk about taxes, right?
Let's talk about taxes.
Year, the IRS has cracked down on a lot of their requirements. And if you guys don't know, taxes is a very unregulated industry. So there's just a lot of free reign. I don't know if you guys have ever been a victim of tax scamming, but it's a real thing out here. And it's only because unregulated. But this year, the IRS is making some steps into regulating some of their different credit options. So for instance, yes, they are. For instance, everybody and their mama had a side hobby. Like somebody was braiding out of their trunk, somebody was selling hair, the dude street was selling DVDs, somebody was always doing something on the side to make ends meet. Right. And at a knowledgeable tax preparer, you was able to file a Schedule C, because if you earned money and you use your earned money to spend on your side business, you can write it off as a deduction because you use your own earned money to support your side hobby. Well, this year, the IRS said, hey, we don't know about doing that anymore. So now, in order to file a Schedule C, you have to be a legitimate business. Typically what happens, you can get away with doing the Schedule C with a business that's not legitimate. And what I mean by legitimate, I mean having the LLC and the EIN, which is an employer identification number. So those are the two main requirements to be a legitimate business. Before, you didn't need those things. Now you need those things. You need at least those two things to file a Schedule C. And that's typically what people do, which is a single member LLC. If you are a single member, it's only you running that business, you file that Schedule C with your personal tax return. If you're a multi-member LLC, then you file an 1120S tax return, which is a corporate tax return, and that's something completely different. But that's
Hold
one
on,
of the
real quick.
Yeah.
So what? So you said if it's two members in an LLC, it's a what?
If it's a multi-member LLC
Mhm.
or a partnership can also be considered a multi-member LLC. Just depends on how you file your taxes, because a multi-member LLC is a corporation. They file a corporation tax return.
So what's a 1065?
I
That
think the
form.
10 is a no. That's not nonprofit. Nonprofit is a 990. A 1065 form. Hold on.
I'm
ready.
sorry, because
I'm prepared. Hold on.
because that's what they did for me last year. A 1065 for a 2-member LLC. So I'm like,
Okay, let's see. A 1065. Okay, let's see.
just want to make sure I file the right form. Next thing you know, Uncle Sam coming to me.
No, let me see. Okay, this one 1140. Okay, 1165. I have my software right here. We ready and prepared.
I'm sorry, I don't threw you off. I'm sorry.
I knew I wasn't crazy. I've never heard of an 11. You said 1165 or
1065.
Wow. Okay, a 1065 is a partnership. Okay, let me see. A Schedule 1 partnership. Let's see what this one is.
Sorry, people. I just had to throw that out there. Sorry.
Oh, that's okay. I think that's a viable question. So this a 1065 would be for a partnership. But a partnership, okay, let's talk different types of structures. You have a single member LLC, which is very similar to a sole proprietorship. Let me talk all the way over. A sole proprietorship, where it's you and your business, you guys are one entity. And what's important to note there is that your personal assets become subjected to someone filing a lawsuit against you. Your personal assets become subjected to that lawsuit, where they're able to personal assets. So that's a sole proprietorship, where your business and you are one. A limited liability company is where your personal assets and your business assets are completely separate. And so, for instance, if you're an Airbnb company and you own the property and you also do Airbnb, this is just a little nugget.
Right.
You want to separate them both. You want to have an LLC for the property, like what's it called? An asset holding company. And then you want to have a separate business for managing the property. And the reason being, if you have a guest that stays in that property and they want to file a lawsuit because the TV fell on their toe, well, if you have the asset separate from the management company, then your asset is still protected because it's underneath another company.
Wow.
So yes. So a limited liability company is another way of protecting assets and to separate those things. So that's a limited liability company. If it's a single member where it's only one owner, then you will file a single member LLC, a Schedule C, on your personal tax return. If it's a multi-member LLC, you will file an 1120S corporation tax return. Okay, so that's LLC. A a partnership is where you can divide the equity in the business however you like, but it's two people running that business, and that's considered a partnership. And then you have an S corporation and C corporation. A C corporation is where the company has dividends. The company is paying out dividends to shareholders. And an S, yes, yes. So if you're a company, you're growing, or a startup, you're growing, and you want to go on, you want to create an IPO where other people can invest in your company, you will convert your company into a C corporation because you're going to eventually pay out dividends to your shareholders.
Gotcha. I always wondered what that was. The S corp and the C corp. Okay.
Yeah. So a C corp, they pay out dividends, and there's more things that there's more red tape with a C corporation. An S corporation is where you have to pay a self-employment tax, and you have to pay out the owner. The owner has to be on payroll. That's the S corporation. So you have to pay the income tax, and you have to pay self-employment tax with the S corporation, and the owner has to be on payroll. And that's when you have to be an S corporation. So what I suggest people start out as is an LLC. You're just starting out. Once you get into the 6-figure range and your company is starting to build profit, not revenue, but build profit, then I would consider going into an S corporation.
Okay.
Just because you have more tax advantage. When you pay self-tax, you get more tax advantages.
Okay.
So,
you answered my question, because as I said, I always wondered what S corp and C corp was. So you further explain that. Once we get yeah, that girl, Carol, that when a company get big and blows up.
Yes. But it just all depends on what's going to work best for you. I like the LLC model and just have 1 million LLCs because it's very easy and it's simple. But when you get into different tax types with the S corp, it can get very convoluted if you don't somebody cleaning up those books at least on a quarterly basis. You don't want to wait till year. So once you start making $50,000 in revenue, I would consider getting some type of bookkeeping software, Wave, Wave, or
see, I like QuickBooks. I'm like,
or QuickBooks.
That's a more, but okay. So you're saying it's easier or it's more manageable if you do quarterly taxes? Is that what you did? Or no, you didn't say nothing about quarterly taxes. You said accountant to go through the books.
Yes, once you start making $50,000 in
revenue,
you want to start considering getting a bookkeeping software.
All right, so let me ask you this: quarterly. I've seen where you can do your quarterly taxes.
Yes.
Which do you think does it work out to be the same, or which one is more, which is better, the quarterly taxes or just waiting once a year to file the taxes?
I think it depends on how much you're making personally. If you're making under $10,000, okay. So if you're doing quarterly taxes, I will say it puts you in a very good practice of doing your taxes and staying on top of your bookkeeping. So quarterly may work for people who are very disorganized. Then do your quarterly tax return, which you can do with the Florida Department of Revenue, or hire someone to do your quarterly taxes for you. But you have to, if you sell a product or if you have a short-term rental, you have to file sales and use tax. If you sell any product, any e-commerce store, you have to sell sales. You have to pay sales and use tax quarterly. You have to, at least in Florida.
Okay.
Yeah. So, what's going on? Oh, the Wi-Fi is going out. Okay. So that's what I would recommend if you have businesses. So for a personal tax return, let's see what else is happening this year.
Wait, stick a pin. Don't get there yet. I have a question too about
Okay.
you can. Carol is like, you talking this week, or normally I'm quiet, but I hear money and I need to make sure that, because Carol don't have enough money to bail me out of tax prison, so
Uh-huh.
I have to make sure. No, Zelle. Before
Uh-huh.
we could Zelle, business people were Zelling and whatever. So now I've heard that if you Zelle over $600 or something, that you'll be taxed. Can you explain to the people out there about the Zelle?
Basically, if it's over $600, it becomes taxable income. It becomes taxable. So not that you have to pay, every time you get over $600, you have to pay taxes. But what happens is Cash App and whatever Zelle, if you use your business, your online banking to do Zelle, or if you use a Zelle app, what's going to happen is they're going to generate a tax form at the end of the year that you have to report to the IRS.
So is it 600 per transaction?
It's 600 total
for the year.
For the year.
So, I thought it was like, okay, Carol gonna pay me, but once it's under $600, that's fine. And then you gonna pay me once it's up. You telling me 600 for the year?
Yeah.
Once it's over 600, okay.
It used to be $15,000. If you did online transactions, $15,000 plus, it becomes reportable. Everybody's Zelle and Cash App.
Yeah.
Does that. Yeah. But if you use that particular platform and it was $15,000 worth of money being generated into that account, it becomes now taxable, and your bank or that platform would generate a tax form for you. But $15,000 used to be the threshold. Right. Now they hold to $600. For whatever reason, the government want to get in y'all business. So, they want business. So that's,
So now you have to go right back to the old school of either paying with a check or taking a credit card.
You know what happened, I think, with the environment changing with cryptocurrency, especially with cryptocurrency, because they really haven't harped down on the crypto laws. So with cryptocurrency, and I don't want to dive too deep into that, but with crypto, oh gosh, sorry, I got a whole nother meeting happening. But with cryptocurrency, you purchase it on a platform, and then you can buy services and products using a wallet just for crypto, and or doing that exchange on the blockchain, and it's non-taxable. So because there's so many different forms of money transactions happening, Zelle, Cash App, and with cryptocurrency, they're like, hey, we got to get a handle on tracking all of these transactions. And that's why they're doing that.
Okay. And the last question on the business is the business deadline. So this is for my business people out there. Is the business deadline the same as the personal deadline? Like, April 15th is for the personal. Is business the same April 15th?
If it's a Schedule C, it's the same. If it's a 1120S, no, it is not the same. That tax return had to be filed, I think 2 weeks ago. Your 1120S, your corporate tax return had to be filed 2 weeks ago.
Oh, so it's way earlier.
Yeah, you have to pay a late penalty.
Okay. Can you repeat that for anybody who's listening that may not have realized that? Please.
Yes. So a corporate tax return has a very different date submission to submit your taxes. It has a very different date than the deadline for a personal tax return. And when I say business, I'm only talking about a corporate tax return, an 1120S specifically. But a 10, and then to include a 1065, only when you're doing a personal tax return or a Schedule C is due in April. But early February is when your corporate tax return was due. So if you're behind, then you have to pay a late penalty.
That's
Okay.
interesting.
Yes.
So I saw something about self-employed people, right? If you're self-employed, they already get a 1099
Yeah,
NEC from the clients who pay them at least the $600 for the year, right? If you're self-employed, you work for somebody, you get at least
yes,
600 for the year. So
yes,
you're supposed to get this 1099 NEC, right? But
yes,
if those clients, like you said, if they're using Venmo, PayPal, Zelle or something, then to get payment from the clients, then not only are they going to be getting that 1099 form, but they're
mhm,
also going to be getting from the payment process itself, right? They're also going to be getting a 1099K.
yes. So if it's over 600, well, okay, let me back up. If you're a 1099 employee, which is normally for like a contracted employee, they're not paying employment tax, employment tax, and all these different taxes on you. So if you're a contracted employee, you're gonna get a 1099 generated for you, so you can pay, so you can report your taxable income, because there's no withdrawals when you are a contracted employee. When you're a contracted employee, you have to pay taxes on that on your earned income, because you didn't pay taxes to begin with.
Okay.
If you get paid through Venmo or Zelle and all those other things, then if it's the same income, then they're not going to tax you twice. Because I feel like that's what we're getting at. Are we getting taxed twice? They're not gonna tax you twice if your employer chooses to pay you through Zelle or chooses to pay you through Venmo. But if it's a transaction where you are paying for a particular service or a product with a particular person and it's consistent, then you have to pay on that taxable income. So, for instance, let me give you an example. If McDonald's hires you as a contractor and they paid you $10,000 for the year, the employer is going to report that. So the IRS is already tracking that you have $10,000 you have to pay taxes on. But if McDonald's pays you over $10,000, or you decide to purchase from Ross continuously, not purchase, but let's see what else. Let me give you an example. You're a tax preparer, and all your clients pay you through Venmo, and you make an additional $10,000. Well, you have to report the $10,000 from Venmo, and you have to pay taxes on the $10,000 from McDonald's. But you don't have to pay taxes on that $10,000 from McDonald's twice, if that makes sense.
Mm.
Does that make sense?
I'm kind of lost on that, because I think I'm wondering if that applies to me, because I have a client that I do voiceover, right? And I have a client that pays me through Zelle, right?
Mm-hmm.
And it's over the $600. So what does that mean for me? And I have an LLC.
Okay, I'm so sorry.
I love the picture though. That's a pretty picture. Girl, you look fabulous.
And your client pays you said over $600?
Yes.
Right. If your client pays you, yes. So that becomes taxable income. But you don't have to pay taxes on that income per transaction. You don't have to. Okay. That payment processor is going to generate a 1099 form for you to pay taxes on it.
Gotcha. Okay.
Yeah.
Okay. Mm-hmm. I see. Okay, that makes a little sense, because when you said that, I was like, wait.
No, yeah. So what it is that there's all these different means. Like, basically the government is saying people making all this money and nobody paying taxes.
Right.
That's what's happening. People have learned to use Zelle and Cash App as their primary means of doing a transaction, paying for a service, but they're not reporting that. They're not reporting that income. So that's why they decided to do that.
Gotcha.
Yeah.
So let's
and everything. There's so much fraud with Cash App. Like, it's incredible. Cash App, Apple Pay is so much fraud, and so they're just trying to get their cut. That's That's really what's happening.
Yeah. Yeah. That's interesting.
Yeah.
Wow. So let's stay along the lines of business taxes for now, before we jump into the personal, right?
Okay.
Because I'm sure a whole lot of people are sitting at home right now and they want to hear the personal. But since you started talking about the business stuff, what are some of like I think you answered already some of the most common business questions, in terms of if you have an LLC, if you're an S corp, if you're this, you're that, the different forms.
Right.
But what if you're a small business? And the reason I'm asking this is because, like you said, we've been in the pandemic for what, like at least 2 years now, and everybody had to pivot and go out there and do something. So everybody has started some kind of little business, right?
Yeah.
Right.
So that's the reason I kind of wanted to chat a little bit more about that for all those people at home who newly started something and don't really know. This might be their first time trying to file as a business. So if you can give any more tips for those people, like I know, for instance, let's say it wasn't last year, maybe the year before, Reese, you and I were chatting about this when they came up with this whole PPP thing, the Paycheck Protection Program, and a whole bunch of people.
Yep.
Yeah.
As you can see, are paying the
a lot of
price.
people
Paying the price.
Yes.
So they might be wondering now,
Yeah.
a small business and they took the PPP, and they qualified for it. I saw something that if you qualified for the forgiveness of the PPP from the IRS, like, can you expound on that a little bit, Antoinique? To say, I'm sorry, I should call you said
Nikki.
Nikki.
Yeah, you can call me.
Good. I can't mess that up. So I'm gonna call you Nikki. So Nikki, can you expound on that a little bit? Because I saw something about that, but I'm not the expert. So I would love for you to go into that a little bit more. If they have the forgiveness for the PPP, is it being taxed? Like, what does that mean? Are there
That's
any
a good question.
small business owners?
And I will say that there is a PPP specific tax form. I don't think, and forgive me because I don't think I read too deep into the PPP. I also have the PPP myself, and it's forgiven. But technically, if you received a loan, no matter where you get the loan from, if you receive a loan is not a taxable income because it's something that you're paying back.
Gotcha.
So that was the confusing part, because normally you don't report a loan. Now, what could have happened is if it's forgiven, now you got this free money.
Right.
And the IRS wants you to pay taxes on this free money. It depends what it is, the amount. Because if you got $15,000 or less, it can be categorized as the gift. If somebody gave you $15,000, let's just say they gave it to you. The SBA gave it to you.
Right.
If they gifted you $15,000, now it's non-taxable income. If you got over $15,000, technically speaking, it should probably be considered taxable income because it was forgiven. But I also, in the same breath, I will also say it's not taxable income because your business was impacted by COVID and they gave you a loan to support your business and help you thrive, paying yourself and keep your business afloat. So I didn't file. There is a PPP form to file. I personally didn't file it because I think that it's justifiable. So every tax preparer is different, and every business tax return client that I've had, I've asked them, what was the situation? There's some businesses that took a really big hit during COVID and their business got shut down completely. And if that PPP loan saved your family, that's non-taxable income.
Okay.
It's all if it's justifiable. If in 2020 your business, or 2019, let's say we can go back to 2019. In 2019, your business made $300,000. In 2020, your business made $50,000. You qualify for that PPP because your business took a hit for COVID. And so that's what that was for. So I think every situation is different based on what was reported in 2019.
Gotcha. And I think I saw somewhere also, and correct me if I'm wrong, I thought I saw where it says, even with that PPP, right? If you use some of that money that you got, I think you just mentioned it, and it says it's okay to deduct the business expenses that you paid for with that PPP loan money, right? It's okay.
So what you were supposed, in order for it to be forgiven, you had to prove to whatever that lender was how you spent that money, and what days did you spend the money. I know I specifically had a spreadsheet with what I was paying that money towards. So that's how you qualify for forgiveness. You had to justify it.
Okay.
And if you didn't go, and some people who didn't qualify for forgiveness got qualified for jail time.
And this is why I'm bringing it up, because so many people went into business last year and everybody was taking the PPP and everybody's grabbing at, all the assistance that they can get, which is fine because we're not judging. We're just trying to tell people, if this is what you did, then watch out for this, or this is okay, and that's not okay.
Right. If you qualify, if you started a business in 2020, if you started a business in 2020, I'm not sure if you qualify for the PPP. I know the SBA specifically wanted 2019 and 2020 tax return.
Yes, they did.
Have 2 years prior.
And yes, you may qualify, but it's what you use the money for. That's getting qualified is one thing. It's what you use the money for. Like, how does a Porsche comes into business? These people were just, and I know they must regret it now. They say, oh, easy money. And then I read where you can have 6 companies and do 6 different loans.
You can.
Yep. You can. Yep.
So another thing I wanted to go through with Nikki, because Nikki is obviously very knowledgeable about this, and this is cool.
That's why she's on the show. Hello. We didn't Google her. Hello.
Right. It's important for us to mention that because our listeners need to hear that, and they need to know that she knows what she's talking about. So, and that's why we're asking these types of questions, so she can give them the answers, not me, not you. So, because
I would Google it. Oh, you said, okay, you want, okay.
I know, right? I'm like, she's going to answer you guys and tell you some things I've seen, but she has to clarify for you because I don't want to be wrong. And this is too important to be wrong.
Yes.
So I saw somewhere also, Nikki, that for 2021 and 22, like, these are just some ways that I wanted us to share with people who started their small business recently, or maybe even last year. I thought it was important that we give them some ways that they could save some money, as a small business owner, if they're not familiar 100%, some people they're making little earrings at home, they're knitting or something, making homemade stuff that they might not be so well versed in how to handle their taxes or ways that they can save. So I love that you talked about the PPP just now, the paycheck protection, just to inform them. But I also saw somewhere that they can, how they can save is by deducting meals, right? So, okay, yes.
The IRS recently came out guidance that they are accepting tax returns with the meals as an expense. Typically, meals is an expense where the IRS will flag you because it's hard to differentiate between the business and the personal meal. So they kind of, it's an area when you're doing taxes where I normally shy away from, because normally that's the place where your tax return gets flagged. But this year, it's not something that they're flagging. So they're adjusting the system where they're accepting returns and they're doing meals. So typically, whatever you spend on meals, business, if you're taking a client out to lunch, you're traveling just for, business travel, anything that you spend on food, you deduct 50%, or you can write off 50% of your meals.
So wait, I'm a business owner and I buy lunch.
Yes.
I can only do 50% of that,
Yeah, so you will do what you pay for the year. So
right?
if I $12,000 for the year on food, everything, you can write off $6,000 of that.
Did not know that. I
Yes.
thought that what you okay. Good to know.
Yes.
So, so the other thing too, where that is concerned, is just to piggyback off of that, like you said, this year they kind of changed it because people are going through so much hardship. So I'm really glad that they considered that, you know, and it said, I saw something where it's up from 50%, the meal deduction thing up from 50% to now 100%. But if it's from a restaurant, like you said, it's got to be a legitimate thing. You know,
Yeah.
you can't be cooking at home and talking about, you know, that's my meals. You know, I went to the supermarket and I bought some food.
I would shy away from 100% unless you can prove it. If you have
be able to prove
that
it.
can justify that, you know, we're not just gonna say, hey, you know, we're gonna wing these numbers together and let's say, you know, it's a $12,000 write-off.
Right.
It's not, especially a $12,000 write-off compared to a $4,000 gross earned income from your business.
I think the distinction there, the key that I saw was that it has to be from a restaurant, right, or something. But you better have those receipts that you can show that it's from a legitimate restaurant, so that you can show that. Okay, that's cool.
Yeah, it doesn't particularly be from a restaurant, but I think overall, because let's say you went to Publix and, you know, like Andrea, she has the E-Girl Friday work bar, and let's say she wants to host an event here and she goes to Sam's Club or she goes to Publix and she gets subs and she gets those platters. Well, that's a business expense because she purchased food for her clients, which is, you know, it's not a restaurant, but you can write off 100%. That will fall in line with that.
Right. Cool. Sounds good. So another quick one that just to remind people of, if you started a small business and you're trying to save, and you know that you might be able to do that. Of course, everybody already knew this for the driving. So if you drive your car and you drive it for work purposes, you can get a tax deduction for when you drive, right, Nikki?
Yes. So if you anything you use personally to conduct business matters, you can write it off.
Okay, got you.
Most times, let's say you can have a home office, a dedicated home space or dedicated office space in your home. You get the square footage of that area that you paid out of the total, the square footage of the area. I think it's like $8 per each square foot, and you get to write that off for the month. Or if you pay a you know, a business lease, then you get to write that off. But anything that you use, if you conduct business in your house, you can write off a percentage of a square footage of your house as a lease payment or rent payment, because that's where you conduct business. I mean, cable, if you need cable or Wi-Fi or internet, if you have internet in your home and you need the internet to conduct your business, you total up your internet expense for the year and you write that off. You use your phone. You total up your cell phone expense for the year and you write that off. I mean, it's anything, and that's why you got to get with somebody that knows.
And that's the reason I'm bringing this out, because you have to talk to somebody who knows this thing. I saw something as well, and I didn't know this, and I thought this was interesting, you know, that and I didn't know this before. If you previously, let's say you had a computer that you bought 4 years ago, right? And it was $3,000 or something, but now you started your business, but you haven't yet claimed it as a business expense. But now you're now using it for your business. You can now use that computer, and for whatever the value is of that computer today, though, you know, it's not worth 3,000 today.
The depreciation for sure.
Right. Yeah. But you can claim that, and that's now an expense. I didn't know that. So it's good to know. Or a table in your house that you're now using for your business. You know,
Let
you
me
took it out of your living room and it's now your office.
You said, how do we save money? I got a hack for you. If you're a person that loves to get your hair done, you buy makeup, you get your nails done, and you're in customer, you're interacting with your customers, you do all of that because you have to present yourself in a way. All of that is advertising costs. I have to get my hair, my nails done. You know, I have to buy new clothes. I have to maintain myself because that's a part of advertising for my business. So you add it up for the year and you can write it off.
Okay, thank you. You just taught me another thing. All right.
Yes.
That's right. Reese, me and you come on this radio every day. You know, we got to look good.
Of course.
Yeah,
I gotta
live every day.
got to write that off.
You have anything that you do to enhance your business and try to get customers, it's a write-off and it's legit.
That's amazing. So that's wonderful. So before we wrap up, because Miss Reese is watching the clock here on me. So before we wrap up the business section of this, are there any other real quick tips that you would like to remind people of in terms of taxes, Nikki, before we go on to personal taxes?
For a business tax return, yes. Specifically for an LLC, single member LLC, Schedule C. I'm not sure if this applies to the 1065, but there's a form called the sick credit leave. So if your business went under because you had to take time off because you caught COVID, or you had children that caught COVID, or you had a family member that caught COVID, and you had to care for them, every day that you missed work from your business, you get $500 a day as a credit. It's called a sick credit. And so that form 7202 is so key because people are making bank. And it's based on your net earned income. Okay. So you made $1,000 for the more you made and you took that time away, the higher the credit was for you.
So those folks, everybody, you need to hear this because almost everybody were like coming down with COVID and sick and all this stuff. So for all of you people who were affected by this, and if you were sick, then you definitely need to check this out. Thank you.
That's my tip.
All right. I like that tip. So if we quickly jump over to, because I would imagine that we probably need to chat even a lot more about personal taxes.
Yes.
Yeah.
Oh, yes.
We can start from the basics real quick. Remind everybody what's the deadline, and why we're talking about it today is because we want people to start as quickly as possible and be mindful of the deadline.
So correct me if I'm wrong, but typically it's the third week of April. Every year it's always been around the third week of April, whatever that date is the deadline, or April 15th.
15th.
Okay, so April 15th.
Unless it falls on the weekend, then they give you like a extra day, because I've seen that.
Okay.
Like if it falls on a Saturday or Sunday, they'll give you the Monday.
Okay, so April 15th is the deadline.
Yeah.
And this year is also a little funny. If you have kids, they gave you that additional child tax credit in advance. So normally what you would get for your children on your tax return, it's a little bit less because they gave you that money up front. So that's one thing important to note. Let me tell you guys that healthcare, those of you who have Obamacare or any healthcare that's tied to the government, it is a requirement to file that 1095A form, anything healthcare marketplace. And let me tell you what they did. So if you get free healthcare, or let's say you get a reduced cost, you get a fraction of the price for healthcare, somebody's paying that other half, and it's the government. And what happens is it's called the premium health tax credit. So every month that you've been paying healthcare or not paying healthcare, the government's been paying for it. And that 1095A form can total up to about $2,000 that they paid for healthcare for you. And you have to file that and it reduces your overall, not reduces, it adds to your income. So you have to pay that money back.
Wow. And this is through the marketplace.
Yes, the healthcare market,
the Obamacare. But
so, yes, if you have any healthcare with the associated with the government, not your employer, not anything with an employer, not anything private. If you have healthcare with the government, and you know it's been a whole big push for the Affordable Care Act and everybody getting healthcare, let me tell you, that is a money making thing that they're doing. They're
I can see.
They're forcing people to get healthcare to take that money back in their tax return. And I've seen it time and time again with all of my clients. That send their tax return, it gets pushed back, and the IRS says, "Hey, this guy or this girl has a 1095-A form. They are required to file it, and their tax return goes from $3,000 to they have to owe $1,500.
Yeah.
It's crazy. Yeah. So I will tell be mindful of that and try to figure out where can you get affordable health care that's aside from the government, because it's not helping anybody with the way that they're doing.
Okay, so during the pandemic, families got that advance money,
the
stimulus, right? Is it going to affect when they file? Is that going to affect anything?
No, the stimulus money doesn't affect you. Only if you didn't receive it, then you will file it during your tax return to claim the money. Okay. But other than that, the stimulus doesn't affect your personal tax return. It did it affected inflation, right? It affected but it's not going to affect your personal tax return.
Okay, good to know. And is there any pandemic changes like that would benefit us?
And just to remind everybody, they should not report the stimulus money as income, right?
Yeah. So when you it's a requirement. It's called the recovery rebate. It's a requirement to report if you received it or not. Your tax return can't be submitted if it wasn't reported.
Right, but do they report it as income?
No, it's a whole separate tax form that they have to fill. That your
that's Uncle Sam's gift to us, too. And yeah. Uncle Sam
it's not reported as income. It's a separate form that they track if you received the stimulus or not.
Got you. Mm-hmm. I'm sorry, Reese. I think I cut your question, but I just wanted Nikki to finish.
Yeah. Yeah,
we
right.
can't jump around. I wanted to keep it on the stimulus. So can you finish your question for me, please?
I don't remember what the question was now.
Okay, I'm gonna give you guys another hack. So if the mother, let's say there's the mother and father, because only one person can file the child. This is one scenario. Only one person can file the child. The mother filed a child in 2020, so she received all of the additional child tax credit, and she received the stimulus. I probably shouldn't be saying this. However, let's say the father files the child. The father can file the child and say he didn't receive anything. And now he receives all the money that she received, he can receive it. And I actually recommend, families to do that so that you have more money in the family.
All right, wait, hold up.
Yeah.
You're going to have to rewind it.
Yeah.
I think I have
supposed to be saying that on the radio. Are they going to be lights going to be showing up in the office door right now?
Well, I probably
all right. Woo!
Yeah. But you know what? It's the same thing that goes for the child. Let's say that your child was 17, you claimed him, but he turned 18 and he's working now. So he can file his own tax return, file single. He didn't receive the stimulus, and now he receives that $1,400 plus if he received the income tax based on his earned income. So your child can also receive that stimulus once they turn 18 and they file as single, and you don't claim them as a dependent.
So you're saying, okay, can a mother file for her 18-year-old? If say for instance, say for instance, I'm in that situation. I have two things I'm going to ask you. So the one, my son is 18. He just got a job like late last year.
Yes.
Right? So could I file for him and he file for himself?
No. So, okay. Okay, yes and no. You can claim your son as a dependent. It's not going to be a huge benefit to you to claim him as a dependent because you don't child tax credit, I think, only goes up to 17 or something like that. You don't get much benefit.
Right.
Or maybe it goes up to 26, but it gets smaller and smaller as they
get older.
So you can file for him as a dependent because you're providing 50% or more for his care. But if he makes over $7,000 from his job, then he has to file anyway. Because once you make $7,000, you have to file single, but he doesn't. But you can still claim as a dependent. On the tax return, this has to say that he can be filed as a dependent.
Got you. And the second question is, you remember that $300 that they were getting every month, right?
The additional.
The additional. So my ex-husband got that $300 for them. I guess because he filed that year, because we're supposed to do alternate filing.
Yes.
Now, would I be able to file for that?
Yes. Yes. Okay. So what happens is, okay, yeah. So let me tell you why. Because he got the additional checks, the child tax credit, because he filed for in 2020, right?
Right.
Yes, this is not the son that's 18. This is somebody else.
No, this is the son that two of them. Yeah, this is two kids.
So if it's a child under 18 and you file, yes, you can get the additional child tax credit. Everything that he got, you'll get.
Well, actually, you know what? He never got it for the 18-year-old. He only got it for the 15-year-old. Yes, right. He never got it for the 18. For some reason, he never got that. He only got it for the younger one.
Okay. Yeah.
Because I guess right. So I guess because he had filed when his last tax returns, the younger one was on there as whatever. Maybe that's the reason why he got it for him. So then I was saying, okay, I'm gonna file for them this year now.
Yes.
So would I be able to get?
Yes, and then now you get that additional child tax credit. Everything that he got, what was it? I think it started in like June or July of last year.
Right.
So, like the 15, some people got 3,000, 1,500, whatever. You will get that $1,500 plus the child tax credit.
Okay.
That's the hack.
Cause you have families out there like that, like the the support thing and who does this year, and it's confusing, and you have families that are going through that. So that's good to know. There's
a lot of families that like the mom just claims the kid, or the father just claims the kid, or whatever, because the two parents can't get on the same page. Like, forget all of that and get this free money that they're giving out, and let the other person claim the child, because it helps the children at the end of the day. That extra money
supposed to help the children.
Yeah, it helps. So to me, you have to put those fews to the side and say, okay, file this. Go ahead and file for him. Get the extra money because it's going to help the whole household.
Right. Makes sense. Boy, I tell you, this tax thing, my head hurting me right now. That's why I don't like numbers and all that math. Oh no, too much.
You know what, really, and not to go back too deep into the business tax return, but people really have to, when you file an LLC and you get your EIN, that's like base number one when it comes to structuring your business. That's base number one. The second thing is coordinating with your county, like getting your business license, coordinating with your county. You got to pay the county tax.
Antoinique, let me tell you, me and Carol said this all the time. It's all cute saying, oh, I own a business, I have a business. Listen, because I was one of them. Oh, I never knew what comes with It's more than paying the rent. It's more than
Right.
paying a business insurance. Okay? It's
Yeah.
more than getting business insurance. It's so much.
Yeah.
It's literally so much. And they, they know. They
I'm gonna have
know.
to come up. I gotta come up in your office, honey, and sit down and get my things straight. I'm
Yes,
telling you because
they gonna call you too. Hey, you missed the quarterly, you missed this, you missed this, you missed this, and now you get a big fat fine.
Yeah.
which I got.
So
Yeah.
you really gotta stay on. You really gotta stay on top of it. And
And
sometimes
a lot of our people don't know that because
Yes.
we're in the game late.
yeah,
We are in the game late. So our people don't know that.
yes,
It's more
not-
than opening a brick and mortar, as I said, and be like, oh, grand opening and all of that. It is so much more.
No, it's more. And I mean, I'm encouraging people to really do your research on your state laws. Like, do the research on your state laws, do the research on your county laws, do your research on the taxes. Because Broward County just came out with this whole nother tax. They have I forget what's it called? It's a new tax they came out with, and it's like 1%, like it's like a 1%, 2% tax that you have to pay, and that money is used to beautify the county. They just came out with that new tax.
My head hurts. My head hurts
So
because I know when I come in there. I know when I come in there to see you, I'm gonna be like, Lordy, Lordy, never knew this. I need to come in with my binder and everything because it's a lot.
Yeah.
It's a lot.
And I also encourage people to hire, to really put that monkey on someone else's back. As an entrepreneur, we're always looking to save money and try to do everything ourselves, and really you're not operating as efficiently as you could if you just delegated the task to somebody else. So I encourage people, pay somebody else to handle your finances, pay somebody else to do your marketing, pay somebody else. Like, it's worth it because it's so stressful being a solopreneur.
Yes.
I'm a serialpreneur.
Like, it is very stressful, and it just gets to a point where you have to hire out.
Carol, we need her to come to our Elite Women in Business meeting.
Yes.
Definitely, because we are a group of businesswomen. Perfect. I'll talk to you off the air with that. Perfect. Yes. This is just perfect.
That's exactly what they all need to hear for each
Yes.
of their individual businesses, because they all have businesses, and this is so crucial. It's so
crucial.
Because like you said, a lot of times when you start business, you're like, okay, I like making earrings, or I like making scarves, and I'm good at it, and I'm gonna do it. And then you do halfway and you're like,
nobody told me about this. You know what I think? There should be a crash course prior to you opening your business, like business 101. And get all the information that you need before you open this business. I'm telling you.
It probably exists, but it's probably
they do have a lot of master classes,
and they have terrible marketing, and nobody. It probably exists.
I gotta find it. We gotta find it because this is good info. This is good info for. And there's a lot of entrepreneurs that's coming everywhere you turn. And most of us are females. If you notice that we're taking over this entrepreneurship, like, whoa.
We are, maybe you gave me an idea. Maybe I should put that together and just kind of package it and just.
Yes. That's some good information right there. Good information. See, hey, when you just connected. Hey, yes. what we call it? Let's connect.
Let's connect.
Yeah.
Let's connect. And definitely.
Going back to taxes, let me see what else has changed from a personal tax return. Okay, last hack. There's so many different hacks with personal tax return. If you contribute, okay, most people have a 401k, right? You guys have a 401k. Or if you have a simple IRA, entrepreneur, you're a full-time entrepreneur, but you want to put money away from retirement, it's called a simple IRA. Okay, well, if you put money away into a simple or traditional IRA, okay, let me back up. An IRA is an individual retirement account. There's two types, traditional and Roth, right? You guys know these terms, traditional and Roth. Well, Roth is where you've already made money, you pay taxes on that money, and then you put it away. So when you turn 62, you don't have to pay taxes on that money. Traditional IRA is earned income that you didn't pay taxes on and you put it away in your retirement. So when you turn 62 and you retire, you pay taxes on it. Well, hold on. What they don't tell you is every year that you contribute to a traditional IRA is a deduction on your taxes. Actually, no, it's a credit. You get a credit for the amount that you contribute to your account. So if you made $15,000 and the max I think is $5,000 per year up until about 50, then after 50 you can contribute $7,000. So $5,000, you made $15,000 for the year. That $5,000 out of the 15 that you contribute to your IRA now becomes a credit, and you get a higher refund if you contribute to a traditional IRA. You don't get, it doesn't affect you if it's Roth because it's already taxable income. But non-taxable income is a credit on your tax return. So on the back end, you benefit for a Roth because you don't pay any taxes. But on a yearly basis, you get a benefit for a traditional IRA.
Girl, I need to come to your class. Please, there's real good info.
Yeah, it definitely is great info. And because there are so many people, you know, some people are still working and whatnot, and they have their IRAs set up, or when they lost their jobs, they rolled over their 401ks into an IRA or something. So this is important information to know.
It is good. Make sure you talk to whoever do your taxes. Hopefully it's me next year or this year. That because a lot of times on your W-2 it is annotated that you have a retirement plan and you contributed to it, but it does no benefit there. You literally have to report it on a qualified contribution traditional form where now it becomes a credit on your tax.
Gotcha. Oh, wow. That's interesting. Oh, love these little gems, girl.
I know.
I'm dropping them.
Yes, that's what we do on this show. I am loving it. And the reason I want you to do that is because I want more people to listen to this and reach out to you.
Yes.
You know, to say, man, she knows what she's doing. I want her to do my stuff. You know, that's the whole idea.
Yes.
You know, because who doesn't want to work with somebody who knows what they're doing?
Exactly.
And if you can get me some money, you know, legally,
right?
I'm gonna come to you. Absolutely.
That's what's up.
I learn. I try to study this stuff as much as I can to help people out. You know, even if you pay property taxes, you own a property. If you own a property and you pay property taxes, your property taxes is a write-off. But the property taxes is on your mortgage interest statement. So that's important to also make sure that you have that as well.
Girl, my head hurting.
Yeah.
It's a lot. It's a lot.
I don't want to, because there's so many, like there's other things that there's other different things that can work.
And you can tell she's passionate about it.
Absolutely.
Like it just rolls off her tongue. She's not stopping and say, "Oh, let me look." I go. She does.
And she's not looking up any answers right now either.
Exactly.
She's rolling off the
answers. Rolling.
So I want to ask you a question, just, you know, on behalf of the listeners. How or do you get a bigger tax refund if you make less money? Right?
Generally,
I know everybody made less than that.
Yes.
I shouldn't say
you know what? It depends. It depends on the situation, because I had a client who her business revenue was like $250K, but she had the biggest tax return I think out of everybody, because there was that 7202, that sick credit. Remember, I told you if you made more money, if you made based on your your net income in your business, and you took a lot of days off for COVID, that really boosted up your refund. They gave you a lot of credits back for that. It was $511 per day. So, and it all was contingent upon your net income. So if you made $250,000 and you was out for like 50 days, you know, we had 2 kids.
50 days because of her being sick of COVID, or just because of COVID?
Just for being sick and taking care of a family member.
Ah.
COVID, yeah. No, I think she walked away with like 13,000.
That's what. But then they're gonna ask for proof, right? See?
Why would they? You know what? I'm gonna tell you what, that it's
because you have people out there already like, okay, I can't. Yeah, you know that we gotta keep it real.
You have to be prepared. Okay, so what the IRS audits is like the earned income credit, the child tax credit, the additional child tax credit, and the American Opportunity Credit.
Gotcha.
Those are the ones they audit. The American Opportunity Credit, people like to claim they went to school. Give me that 1095. Give me that 1095. That 1098 Form T from
that
school.
Right.
Yeah, that shows you went to school. So those 4 credits are the ones that the IRS.
They're concentrate. Got you.
Yeah. So this other stuff, if you claimed the business for 4-5 years, okay, it probably applies. But if you just started a business and then now you claiming this, and it's, maybe it's a
red flag.
Yeah.
Okay.
One of the questions also is for people who may have just started jobs, and now also, well, we're talking about 2021. You're filing your tax now for 2021 year. But if anybody found jobs in 2021, etc., for me, I know I've been working for many years, and I always grappled with the question of, when I'm filling out my paperwork, right? Do I claim 1 or do I claim 0 on my taxes? Like, what do I do? What's the best one? Can you explain that for people?
Yeah, your W4, and let me tell you, that changed now. That also changed. Oh. Okay. Let's talk about W4s when you first get a job. So you can choose to have your taxes withheld, meaning, let me gather my words. Okay, well, if you choose your taxes withheld, that means you're not paying any taxes. You're gonna pay your taxes at the end of the year on your tax return.
So when you're doing it, just 1 second, stick a pin right there. So when you fill out the paper and you claim, you put 0 or 1?
If you put 0, for taxes withheld, right? Okay. That means that you're not paying any taxes because you're withholding them.
Yeah.
So
end of the year.
Paying any taxes.
So you're not paying any taxes during that whole time, but at the end of the year,
they're gonna hit you. Hey, you made $70,000. You got to pay us 7. Normally it's 10%. So you made 70, you got to pay 7,000 because you withheld your taxes throughout the year.
Because you want that money,
right?
You wanted to get the money during, while you're living.
Some people say, well, I want all my money now. I don't want to wait till the end of the year. I want all my money now. Okay, that's fine. And that makes sense for somebody who has like tax credits and, you have kids and you have all of the stuff going on, then that makes sense because you're not going to have to owe the IRS.
Yeah, but then at the end of the year, you have to go pay that money back.
Not all the time. So let's say you have 70, you made $70,000 and you withheld taxes, so you didn't pay no taxes on that income.
Right.
So just for this scenario, now you owe the government $7,000 because normally it's 10%.
Right.
Well, if you have 2 kids, You normally get $2,500 as a standard deduction. You get $2,500 per kid. So now your $7,000 was reduced to $2,000 because you got $2,500 per kid. Okay, does that make sense?
Right. Okay.
So now what you owe is $2,000. Okay, but let's not stop there. You contributed to your traditional IRA. You contributed $3,000. Okay, now it reduced to another $3,000. So now
it's a case by case basis.
Yes, if you have these other things going on, like you have a business, now if you have a business as well, your business made $5,000, but total you spent $20,000 in expenses. Well, your 70 plus the 5 is 75, but your $20,000 in expenses now reduce your 75 to 55 as gross income. And so that also offsets your tax balance. So having business can offset your tax balance. Going to school can offset your tax balance. There's all these different ways to adjust the tax bill. But I think it makes sense for people who have these other things going on where they don't have to pay this big bill at the end of the year. But if you need your money right now, I understand why you withholding it too. But it's really it's up to the person on how they want to handle their money. For me, I rather pay my taxes. Like, I don't want no big bill at the end of the year.
Exactly. And on the other side of that is if you claimed one, which is you're claiming yourself, you are paying taxes throughout the year. So you get less taxed at the end of the year.
Correct. Because you are paying taxes. Correct.
Okay. So everybody, I hope that was clear for you. For years, that was always a thing for me. I'm like, what does that mean again? What do I do?
Yeah. You just got to be mindful, because nobody likes, nobody, especially, oh my God, if you do taxes withheld and you have a 1095-A form, I'm telling you guys, it really hurted me to tell this lady that she owed the government $2,000.
Yeah.
Because she taxes withheld and she had 1095-A form. This particular year, these conversations have gotten rough. Because they cracked down on some of these requirements.
Absolutely. Okay. So let's talk, you touched on it before. So if we could go back a little bit, I want to chat about dependence, right? Because I heard you and Reese were talking about that. So I like to tailor my questions to things that are relevant to what we're going through right now. We were in a pandemic. And who knows, maybe we ended up with dependents that we didn't have before, because people now, moving into your house and living with you that probably were not there before, because, you lose your job, you got to move back home to mom or something.
Right.
Never know. So that's one of the reasons I'm trying to ask about, dependent. So can someone claim themselves as a dependent?
No.
Okay. All right.
No.
So, I know the answer to that, but I have to ask because I want everybody to be very clear when you're filing your taxes, you cannot claim yourself as a dependent, okay?
The return can't be submitted because it's going to show a duplicate social security number. Okay. There's like pair and then there's dependent, and if it's the same social security number, it's gonna show a duplicate. You know what I'm saying?
I see. Okay, so now that we got that, also there is a question about can someone claim their boyfriend as a dependent? We had a lot of babies that were born during this pandemic, so there are a whole lot of people living together. So can they claim their boyfriend as a dependent?
You can claim anybody as a dependent, but is it really a benefit to you? Probably not. A grown man, that's not, unless he's disabled. If he's getting a disabled check and I hate to say it like that, but if he's getting some kind of assistance, then it could benefit you because there's a credit for like receiving disability. If you receive that disability assistance, then there's a credit for that. And so if you're providing care to that disabled person, then yes, it will benefit you to claim them as a dependent. But if you're not providing care for somebody that's disabled, this is just Joe Schmo who don't have a job because because of COVID, it's not going to benefit you.
Okay. So then another dependent question is, can someone claim their 40-year-old son or daughter as a dependent?
If they're living with them?
It would be the same scenario. If it's a disabled person, if they're receiving some kind of disability, they're a veteran, if they're getting a veteran, if they're getting veteran disability, so there's disability because of like mental illness and, physical limitations, and then there's disability for veterans. If those two apply, then yes, you claim them.
I saw something about them as a qualifying relative, right? Or something like that. You claim them as a
qualifying relative is like an elderly person. So the thing is, you can claim anybody as a dependent. The point that I'm getting after is it going to benefit you?
Right.
I could claim my mom, my dad, I can claim whoever, right? And they could be a qualifying relative because the qualifying piece is if you provide 50% that person. I'm paying 50% of your expenses, you my dependent. But does that mean it's going to be a benefit for you on your tax return? Not necessarily.
Got you.
Right.
Because you have them bums that want to be home with their parents and don't want to do nothing.
Right.
They better get me some money somehow.
Go to school. If you're a dependent, go to school and let that person get the American tax credit. That's the benefit. And you don't.
I love that you added that, because what I had seen was what you said before. Yeah, you can claim them, especially if they made less than $4,300 in 2021, etc. And if you, as the person who's filing the taxes, if you provided more than half of their support during the year, yeah, you can claim them. But I love the fact that you added your information to that, your expertise to that, and say, is it going to benefit you if you do that? So that part, I like that. Thank you.
You're welcome. Yeah, so it poses no benefit sometimes if it's if they're between the ages of 26 and 60, don't even worry about it unless they're getting some kind of disability or veteran assistance. Then yeah, but if not, no.
Yeah, I think that's great to distinguish that. And I think you're gonna have similar answers to this one too. Should my parents claim me as a dependent? Somebody is asking, should my parents claim me as a dependent?
Should somebody claim as dependent if you're under 18 and you made less than $10,000 and you went to school? It just depends on what the scenario is. So if your parents need the extra money, then let them claim you because you're in school. That's the key. Right. If you're under 18 and you're in school, let your parents claim you. And you made less than $10,000. So 3 things: under 18, you made less than $10,000, you went to school. Yes, let your parents. If you are over 18 and you went to school and you made over $10,000, I would recommend that you claim yourself because 1, you get the stimulus money. And college can be you on the struggle bus. So if you're in college and you're over 18 and you working and all that, you probably need the extra stimulus money. So go ahead and file for yourself. And it's just best, and plus it encourages your journey as an independent, citizen. So I always recommend young 18, 19, 20 and you're working to file your own taxes. But again, it's those 3 stipulations. If you're making less than $10,000, you're in school, you're under 18, let your parents file for you. If you're between the ages of 18 and 20 and you're in school and you're making less than $10,000, also let your parents claim you. So definitely the main threshold is how much you make. If you make less than $10,000 and you're in school, let your parents claim you. Yeah.
Okay.
I hope that answers the question.
Yes. You know, and then like one of my last question, I have more, but I'm not gonna kill you with those today. Kind of.
Antoinique, if you leave it here until 12 o'clock asking about tax.
I see. No, I thought it was gonna be quick, but you guys have really good questions, and I'm really glad that you know, you
try to prepare my questions to make sure you know that your time is well spent.
Yes, it was really like these are really good questions to ask. So I'm really happy. I had an idea of what I was gonna talk about. I thought I was kind of just gonna be kind of talking, whatever.
No, we don't do that here. We have a chat here. That's what we do on Let's Connect, because the whole idea is to make people feel connected and making sure that they understand. So not, you know, having you come on here, not having you do all the work and you just, you know, talking at people. So we're in here just chatting and making sure people understand, you know, and can relate to what you're saying. So you get the best bang for your time also.
I love that.
Thank you. We try. So kind of like my last question, you know, everybody always wants to know about the tax bracket and what tax bracket that they're in. So if you could just lastly drop us a little bit, because I don't know how to, like what are the rates? Like if you make so much money, what's your tax bracket that you end up in? And you know, can you tell us a little bit about that if that question is a little ambiguous?
So if you make less than $20,000 and you have a kid, you can qualify for the earned income credit.
Okay.
And so that's good. If you make between, let's not even do kids. Let's just do no kids. If you make under $20,000, then it's a standard like 8%. I think it's 8%.
Okay.
If you make between 30 and 50. If you're between 30 and 50, it's like 10%. When you get to 60 to 80, it's like 15%. So some people owe once they start making 65, 75, you know, they start getting to the 80K, you know, once you start getting to that tax bracket, because like I said, generally it's 10%. Generally it's like a 10% what you have to pay. But what happens is when you're the start date, every year your employer says, hey, this person's supposed to make this much, or they have an idea of how much you're supposed to make, and that adjusts your tax rate. But if you make more than that throughout the year, commissions, anything, whatever, tips, you make more than that and you make over that threshold, now you go to another tax bracket, that 15%, and now you owe money. So sometimes you see that where you may pay income tax, but you still owe. And you still owe because your employer told the IRS that you was going to make, or told your payroll system that you was going to make a certain amount for the year, and they had a standard tax rate. But because you made more than what they projected, now you went to a different tax bracket and you have to pay more. So that's generally what it is, like 8, 10, 15%. And then from 15 to like 18, once you get to like 100 or 90 to 120 is about somewhere like 18%. And then everything else above that, they be writing everything off. So,
wow. I hear you. I did see somewhere like the top tax rate is 37%. That's right. So, and that's for like people who make like $500,000 and $523,000. Which Reese, that's what they're gonna tax us, right? Because you know that's what we're making, right?
I think it's 500. It might be. I think it's 350. From what I think it's 350. It's something around like 350. It's not quarter. I don't think it's quarter. It's not $500,000. Okay. I think it's 350. Yeah. Once you start getting into $300,000 and above, your tax rate is ridiculous. Like it's you gotta have a business. Like who wants to pay 37% in taxes? That's crazy.
Really, 37%. So no wonder all these folks that make all that money never want to pay their taxes, right?
Yeah, you know what? But sometimes you want to show the government that you paying taxes if you want to buy a house, because you don't want to write off a lot of stuff on your tax return, and you get ready to buy a house because it's going to reduce your overall income, your overall net income. Because they go by your net income, not your gross income. Whatever you take home, that's how they qualify you for your loan amount, your net income.
Okay. Well, Reese, do you have any other questions?
No, honey.
Well, there are lots of other questions, and trust me, I have, but I don't want to bombard you. And you have been absolutely wonderful, and I'm honest when I say that. Okay. I'm really being honest when I say that. So thank you,
guys. Like, the questions I really wasn't expecting. So many thorough questions, but it was really good, and it was really like I would have wanted to watch this even if it wasn't me, because it was just so much information.
Yes, and if we were on live, you would have gotten more questions. Because most of what, so this is going to be on YouTube because we have a YouTube channel. So definitely.
Yeah, if we were on our Facebook Live like we normally are, we would have been pelted with a whole bunch of questions from folks who love to ask so many questions. But not to worry. I would like you to give out your information right now. Tell everybody where they can find you, because everybody, she's knowledgeable because you sat here and you listened to it. So tell people where they can find you. And so I'll ask the question after you tell them where they can find
more questions. After you question the lady,
no, it's a follow-up question. Okay. She might say it, so I don't have to ask.
I want to scare Antoinique from coming back on the show now.
No, man.
Okay, you can find me personally on my Instagram. It's probably the easiest way to reach me. I get a lot of DMs on there, so you can reach me on Instagram at CEO Antoinique. That's CEO Antoinique. That's me on Instagram, Twitter, even TikTok. I'm on TikTok too. So if you want to reach me there, you can reach me there. The business has Instagram. It's Dream Financial Group. You can visit my website at www.dreamfingroup.com. Like I said before, not only do I do tax consulting, tax preparation, but I do credit restoration and credit repair, because it's my number one goal to make sure that you are reaching your dream financial goals. And I want to be a part of that journey to help you get there. So you can reach me on that email. You can email tax appointment at dreamfingroup.com. You can check me out.
You're going really fast. And, our people, we always tell them to have a pen and paper, so they're writing. Okay. And for those folks who write slowly, so tell me your email again.
My email is tax appointment.
No S, right?
No S. At
tax appointment
at dreamfingroup.com. I'm so used. So when I was in college, I was on the radio. I was a radio show host, and I was a DJ. So on the radio, you so short with time. You got to get you can reach me on Instagram. You can reach me on IG at email. Check out my website.
We old people over here, honey.
Yes.
We old over here. I'm just getting my pen from I just got my pen.
I saw the struggle, girl. The struggle is real. So let me just and Instagram is CEO Antoinique, right?
Yes. As soon as you put CEO ANT, you're gonna pop up. I'm gonna pop up.
Don't you have an IG also for Dream Financial Group?
Yes, I have an Instagram for Dream Financial Group.
Okay. So which one do you prefer that they reach out to you at?
Either one. I manage both accounts. So you can reach me at either one. I'm probably gonna start running a special beginning March. You guys know March is Women's History Month. So it's gonna be my goal to help 100 women fix their credit It's gonna be my number one goal for March. So I'm probably gonna run a special. You guys heard it here first. So make sure you start on March 1st. Dream Fin Group, check it out. I'm gonna have this whole blast helping 100 women fix their credit for a small fee of like $99. Normally I would charge around $350, but just $99 to get you started on your way to achieving your financial dreams.
Absolutely. Nice. Absolutely. So I want to thank you so much. Now, if somebody, let's say for me, you know, you guys are in the Florida area.
Yes.
For me, I'm in the New York, New Jersey area. So can somebody like me reach out to you for help? Or, you know, we have a lot of listeners that are in all the different states, you know, and they join us every week and they listen to us from all the different states that they're in. Are you able to work with them, or just if you're in the Florida area?
For taxes, I can do anybody in the United States.
Okay.
I could do anybody in the United States. I'm trying to see if I can figure out something for Canada. I have clients in Canada that want me to do that. So Canada, I don't know, but anywhere in the US, I can definitely help you.
Oh, okay, that's good.
That's awesome.
Oh yeah, for sure.
I thought you were gonna say, see, that was gonna be my follow-up question, Miss Reese. You were rushing me so much.
I wasn't rushing you. I just want Antoinique to say, yeah, where we invite her back.
Giving her a chance to say it herself.
Like, I don't know about that. You know, I'm just making sure. That's good to know, though. That's good to know.
Great to know, because you know you're so knowledgeable and so great at what you're doing and sharing the information with us, that there are people now, we know that you can help anybody. So everybody, if you're listening right now and the tax season is just starting and you haven't filed yet and you're not sure if you found a good person to help you out, well, we found a good person for you. So hop on that right away. Is there a phone number that you'd like to put on blast, or just your email?
You can call me, but I prefer text on all. Everybody call me at once. Don't do that, please. My number is 954-204-6301. 954 is a Broward County area code. So yes, you guys can text me.
954-204-6301.
Yes,
right.
Yes.
And we'll put that, everybody, don't worry, we'll put it in the video as well.
I have another, let me give you another number. I have another number. Hold on.
Okay. So while you're looking for the number, I just want people to know and be reminded that we're going to be putting this number when we upload this episode to our YouTube channel. All the information will be there. So you can go and access that. You'll see all these links and you'll see the phone numbers as well. So don't worry, if you didn't catch it while we were talking, we'll give it to you. Okay, just go watch the episode again, take your notes on our YouTube channel and write down the phone number or whatever. It's going to be posted for you.
Yes,
we're ready. What's the other number?
The second number, if you need help with taxes, not taxes, with credit specifically, you're going to text fix my credit. Fix my credit. You're going to text that to 1-844-785-0948.
Oh, that's cute.
Thank you. Yes.
That's right.
So if you need help with credit repair specifically, then you're just going to text that number and we'll get you started immediately. But if it's taxes, you could text my personal cell and I could be able to help you with that as well.
Okie dokie.
Thank you so much, my dear.
Antoinique, thank you so much for coming on.
I love this. I love you guys. I love the energy. I think it's so cool that you have somebody from Florida and somebody from New York, and you guys join forces to create this platform. So I want to say first, thank you for inviting me. It was a pleasure to be here with you all and just kind of talk taxes, because this is my thing. I love to talk about money. Hey. I just appreciate you for even giving me the opportunity.
And you'll come back, right? You'll come back another time?
Yes, I will definitely.
Oh,
I
we're
was definitely-
serious about that.
Yeah, you can come back and talk about credit.
Yes,
Yes,
because you
I
can never talk about it too much. I mean,
Can't.
credit we have episodes just going over credit, and now that
Yeah.
we know that you have that as well as another arm of your business,
Yes.
we would love for you to come back and chat about credit and credit repair and what people need to do and how you can help them and so forth. Or even later on, again, we can talk about tax questions that people might have and don't
Yes.
Yeah.
know what to do. So we would love for you to come back. And when you're doing your you're running your special, okay, if
Yes.
you create any ads or something for it for social media, tag us and
Okay.
we will also we'll blast it out for you as well. Okay.
Oh, thank you. I really appreciate you guys. Oh my
That's
God.
what we do here on Let's Connect, girl, because we like to connect.
Yes.
I love. How long have you guys been doing this show?
We
But,
started in 2020, September of 2020.
Wow.
Yeah.
so we try to we getting there, girl.
We've had so many amazing episodes.
Check us out on YouTube. I mean,
Yeah.
we not only talk about business, because I'm just like, I have to have some fun in there. I'm sorry. I cannot be strictly serious.
We
Carol
talk
is a
about
serious business,
talk about mental health,
relationship,
we
we
talk
talk
about
about
autism,
relationships,
relationships, we talk
I
all
blended
that.
families, we talk about everything.
I love talking about relationships. It's like my number one thing. I talk about relationships more. I talk.
You missed our show on Valentine's Day, honey.
You and her, all
I'm all
relationships.
into love.
She's
I'm the
all
one. I'm one of
excited.
those girls that run through the meadows with the lilies and the daisies, and just like, ooh, I'm in love. I love love.
She's like, I love
I
love.
love love. So check us out. And as I said, thank you so much for coming. And we'll definitely. I know where to find you anyway, so you'll definitely come back.
You already know. I'm in the office.
Okay.
Yeah. Just post a nice little review for us.
Yes.
On your page, just to let people know that these girls are really good. They treated me nice.
Yeah,
I
recorded, so I'll put it on my Instagram.
Okay.
Awesome.
Cool. All righty, Antoinique.
Thanks for coming, and you will be back.
Okay, have a good night.
All right, you too. Bye. Yes, honey. It was good. This tax
Yes.
is so much.
Yeah, taxes. When it comes to taxes, I need to talk to someone like her who can really talk me off the ledge and really tell me everything I need to know, because I always have a ton of questions and I like to prepare questions for her, because it's a heavy topic, and it's a heavy topic for most people. So we don't want to overwhelm people, and we don't want to take it too lightly either.
I was overwhelmed, but I learned a lot. There's a lot of stuff that she answered I was confused about and I didn't know. And she actually answered it. So that's a good thing.
And we had to do that because people can go back to the episode. So if we didn't go deep, then what's the point of having it up on YouTube so people can constantly go back and sit with it at their own leisure?
Exactly.
Go through it with their pen and paper at their own pace and take some notes. So that's the reason that, we had to go deep, even though on the radio all at once, it can be overwhelming. But we did that for you, everybody. So you can take your time and go back and look at it on YouTube and, walk through with your pen and paper and do what you want to do. All right, my dear.
All right. So
that's all my questions.
Yes. So you want to wrap up for people?
Yes. Why don't you go ahead?
I'm tired. You do it. I'm used to you doing the wrap up. You spoiled me like that. I don't want to do a wrap up. You do the wrap up.
Well, everybody, we want to just thank you guys for hanging with us today. We had a little hiccup in the beginning. So we started a little bit later than normal. So that's why we also added a little extra time on the end. So if you're still with us, thank you so much
Yes,
for hanging out with us, listening to us, because this is what we love to do. We love to connect everybody. That's the reason we're called Let's Connect.
exactly.
And we hope we've answered your questions for you. We've asked the questions that you want to hear, and we've answered the questions to your liking. And if we didn't, hey, go on out to the YouTube page and put your questions in the comment box.
Yeah.
We're going to be checking. So if you have questions, put them out there, and we will get Miss Nikki Antoinique to answer all your questions for you. And of course, her links are going to be there. We'll put it and the phone number and everything, so you can reach out to her yourself. Okay, or put the questions there. It doesn't matter. We'll help you. That's what we're here for. Okay. We love you, everybody. Again, this is the show called Let's Connect. We love you. We're here every Monday evening, normally from 6 to 8 p.m. usually, except when we have a hiccup.
But the devil thought he was not going to have us on today. But trust me, Super Reese came to the rescue. Yep. I put on my Wonder Girl cape and was like, we going to get this show done today.
Yes. So we thank you for being with us, everybody, and for sticking with us and popping on over to the radio if you were not on the radio. So we thank you for listening on the radio. You should always listen on the radio, because that's how we really know how many folks are checking us out. And we'll see you next week. This is the show called Let's Connect, where you find
more compassion,
more empathy, and
less judgment.
Thank you, everybody. We'll see you next week. Bye-bye.
Bye, guys.